Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Monday, December 12th, and then we'll see how things look for Tuesday, December 13th. We had a pretty solid up day, and it's helped to improve the technical picture. We're still negative overall. Our oscillators, although they bumped a little bit in the positive direction, they're still negative overall. We're dealing with some moving average resistance right above where we're at. Our ADX continues to be in a trendless environment, and the markets are waiting for the CPI to be released on Tuesday, which could be a big thing. And there's been a lot of anticipation, both with Tuesday's action with the CPI, and then Wednesday, the Fed will be coming out with their interest rate announcement and press conference. And they're pretty much believing that it'll be a 50 basis point move. So let's go back and talk about what happened. Right at the open, we had a higher open with prices hitting resistance at the daily pivot. That was at first. That daily pivot was at 39.48. As the day went on, we were able to break through the daily pivot and hit resistance up at R1 at 39.63. Prices then advanced above R1 and got almost to R2, not quite, almost. At 39.92, we closed at the high for the day, and we were up 1.43%. That's pretty positive overall, but it really is kind of taken us to the upper end of this range that we've been in for a while now. Volume was still below average, which that's a bit of a concern to have an up day on below average volume. And the technicals, as I said, and I have a few charts to show you this, they're improving, but we're still negative overall. With the big fixation being inflation and interest rates, that's what everybody's talking about right now, or what they're focusing on. All right, here is the daily session, where here's Friday's close on the 9th, where we had a higher open. We came up to the pivot, and it acted as resistance for much of the morning, or at least the open. We finally broke through the daily pivot and made our way up to R1. It had acted as resistance earlier in the day. Well, we were able to break through above that. We got almost to R2, and we closed right at the high. So this is pretty positive overall. Now we have to look at it in the context of the bigger picture of what's happening on our daily charts. So some comments that we can make: the CPI will come out on Tuesday, the FOMC, all that stuff will happen on Wednesday. The dollar was up, which usually has been providing some headwinds for stocks, and interest rates rose. That also has been providing a headwind for stocks. So to see all of them up on the same day is kind of strange. Small caps, and this is a little bit of a concern, they're underperforming the S&P, and I have a chart to show you that. In a good, healthy environment, we want to see small caps at least keeping pace with the S&P, if not outperforming, and it's not right now, or they're not. There is some moving average resistance that I found as I was looking through the charts that I'll show you. And then sector rotation. On a big update, you would think growth would outperform value. No, that's not what happened. And just to show you a bit of an update on that, I have some charts that I'll show. And the VIX, this is another strange thing. The VIX was up on an up day. Not necessarily normal. On a normal day, when the market's going up, we would see the VIX going down. We've worn off this oversold short-term condition. That's pretty much gone now with the 1.5, almost 1.43% gain. But on an intermediate term basis, when we look at the rate of change going back 50 periods, we've already shot up to extreme positive. Now, this is the only indicator that's showing this, but I just want to make you aware that it'll probably work its way off. It's going back 50 periods, so it's looking more at the lower prices that we were at not so long ago and calculating that way. And we still have all of our yield curves are inverted. Sentiment, this is interesting. With the up day, we've ticked over into the positive area where we had been neutral before. So we're just slightly to the side of positive now. And we had the Treasury budget, and apparently in Monday's video, I was incorrect on what was coming out in Monday's session. The calendar was wrong, or I looked at the wrong day or something. But we had the Treasury budget come out, and that was really the only release. It showed a deficit of $248.5 billion, where a year ago it was $191.3 billion. So the government is continuing to spend much more than what is available. Our trend is slightly positive. The green line's still on top, but it is weakening. We're below 20 and declining. Our bias, I've switched back to mix. Even though it was a strong up day, we've had a number of negative days that have been happening. And it's, especially with the CPI coming out, it's pretty much a roll of the dice right now, how the market's going to react to that. If it comes in hot, we're going lower. If it comes in at or below what they expected, we're going to shoot higher. And that would really help our technical picture a lot. But right now, as we stand, you're gambling at this point. And then momentum, I've still kept to negative. Now, if we have an up day on Tuesday and inflation seems to be under control, if not declining, that might switch and we might get that positive flare back. But again, if it comes in hotter than expected, we could really see things move down. All right, so here's our model that we've been looking at. And as of right now, it still looks like we could be going along the same basic trend of this model, where going into the end of the year, it's seeing a lot of weakness ahead. Now, we get a couple of good up days on Tuesday. The CPI, let's say it comes in friendly, the market shoots up. The FOMC comes out. They do what they expected to do at 50 basis points. And they like what Chairperson Powell says in the press conference. Market shoots up again. We could switch back over to a positive environment. The inverse of that is also true. We could get a hot CPI report and the market tanks. They could come out on Wednesday and say, we're worried about inflation and we'll do whatever it takes to make sure inflation's under control. And they say things that are real hawkish towards the market, then it could tank that way. So we're kind of still at that tipping point with what's happening. Also with the VIX, we're still at a pretty low level now. And if prices do fall, we'll see the VIX continue to go up. Now, in Monday's session, we had an up day and the VIX went up too. That's kind of strange, but typically that's not what happens. Here's the one-day chart from Friday to Monday, where we probably overdid it on the advanced decline ratio. We had a good, solid upward thrust of movement, but we've had a lot of those only to see the market quickly fizzle out not too long after that. Here's the rate of change 50, showing if you go back 50 periods, it does suggest that we've gone a little too far, too fast. This is going back to about the October lows and measuring it from there. Here's the VIX showing on the line chart where we did go up on an up day in the S&P, and the bar chart also, it gapped up as well. So that's kind of strange. It just means that inside the S&P 500, there's a lot of hedging going on. There's a lot of uncertainty right now, and folks don't want to get caught on the wrong side. They're willing to sacrifice some of their return for safety right now. And so you're seeing an increase of hedging. All right, here is the Fed Watch tool as of Monday's close, where they're saying that there's a 77% chance that they'll be, after the meeting on Wednesday, they'll be at 4.25 to 4.5. And that's pretty much the prevailing rate right now. There's still 23% that think, at least in the market sense, that we're going to go 75 basis points in the meeting. So, but the chances are that they're going to go with the 50 basis point increase. Here's the small cap ratio to the S&P. See how it's really been underperforming, and it actually darted quite a bit lower in Monday's session. So that's a little concerning. Here's our sector rotation, showing how even with the solid update, the Qs to the S&P, flat. Discretionary to the S&P actually declined. Growth to value, flat. Here's our other chart. When we look at our growth to value with the large, mid, and small caps, flat, and actually declined slightly. So this is not necessarily encouraging of what we saw in Monday's action. Here's our trend where we're still declining with the ADX going down. We're below the moving average. The green line is still on top, so it's still slightly positive, and the red line is declining as well. Here's the BPI. Even with the update, we didn't shoot back up into extreme positive. That could be seen as somewhat positive in that we're still at a high level and we're not overbought at this point. On the negative side, we spiked up right here, and we've been coming back down. And when we see spikes like this in the past, look at what the S&P did after that. So we're kind of in between with do we look at this in a positive way or in a negative way right now? Because all of our other indicators are more negative, I'm still defaulting to the negative side until we see more follow through with price action to turn things more positive. Here's our double and exponential moving averages. This DEMA, or the double exponential moving average, going back 50 periods, this has been providing pretty good support right now, but we're still below the triple exponential moving average. That's above where we're at currently. Here's the equity put call ratio. It declined on an up day. So we saw the VIX go up and the equity put call ratio go down. But at the same time, last week, we saw this really spiking up where the VIX was not, it was doing the opposite of that. It was actually going down a lot of those days. And here's our 5-day simple moving average where we tick down just slightly, but we're still at a quite high level. This is the spike that we're working off of right now. If we were in a more positive environment, we would want to see this equity put call ratio really continue to decline. And we're not really seeing that yet. Here's the daily chart where we still have overhead resistance at the 200-day moving average. We're above the 50-period moving average. We're above the pivot, so that's more of a positive slant. But we've been just dancing along this pivot now for 1, 2, 3, 4, really 5 trading days. Can what's going to happen this week break us out to the upside, or is it going to break us down to the downside? And then down below, we have below average volume. Here's the overhead resistance I'm talking about at the 50-period moving average. We came right up to that, and that's where we closed at this point. Actually, that should be the 20-period moving average. And that's shorter term. The 50s are still down below where we're at. And we still have the 200s above where we're at currently. So this overhead resistance is at the 20 moving averages. New highs, new lows, didn't really see a breakout with a 1.43% gain. And this this green didn't dart up. It's not really positive there. Overall, we're still declining with the 5 and the 10. Now, a large part of why we haven't seen any new highs is they were registered when we've been in this mess that we've been in now for about a month. If we break to the upside, this will probably break out as well. If we break to the downside, we'll probably see a real increase in the new lows. Not really anything new with our short-term fib levels. We still have overhead resistance at about the 4,005 level on the short term. We do have some support below us currently at this 50% retracement, and kind of in no man's land still with the longer term chart. We have resistance at 40.20 roughly right in there, and we have some resistance at the 38.26 level, but we've just been darting sideways overall lately. So what's our outlook then for Tuesday? The technicals are still negative, but they're showing improvement. We have the CPI coming out and the NFIB small business optimism coming out, but the big one will be the CPI. And then I have some additional charts that I'll show you in tomorrow's video, and we'll just see what inflation is doing at this point. We still have the whole list of geopolitical events, but the stock market is really fixated on the inflation and interest rate scenario. Oil, it was up a little bit, but it's really been declining lately. We're going to get a lot of Fed speak in Wednesday's session. So our scenarios can't really go with the down, even though the technicals are negative, but they're showing some improvement, and we're trendless currently. Can't really go with the up because our scenarios, they did show some improvement, the positive setups that we have, and those are more moving average based. So if we have an up day, they're going to go up and show some improvement themselves. But our sector rotation, that's a bit concerning to have a solid up day like we had and that really not participate in that whole move. So that's a little bit more negative. We can't go with the positive scenario because, again, all of our technicals are really going down right now, although they are showing some improvement. We get a solid 1 or 2 up days and that could change, but we could get a couple of down days and reinforce the negative side. So we're going more with the sideways right now because the ADX is weakening. It's still below 20 and the green line's on top. So we default that way, more positive, but our other technical picture is suggesting that we're more negative. So what's our conclusion? The S&P is negative, but showing some improvement. Short term, negative, but improving. We're still negative in the long term, or excuse me, the intermediate term, and negative in the long term because we're still below that 200-day moving average. And that does more damage each day that goes by, and that we're below that moving average. Thank you. Have a wonderful day on Tuesday. I'll be watching things closely and prepare the video after Tuesday's session. So have a great day, and I'll talk to you in the next video.